Hello, plebs. Today is September 11th, 2024. 23 years ago today was a very solemn day in this country. I was not in New York City, Washington, D.C., or even Pennsylvania that day, but it was a day that would affect the course of my life and those around me profoundly. While I am not a fan of the way it has since been used to restrict our civil liberties, I do want to honor the numerous brave men and women who charged up 100 flight of stairs that morning to help those who were in need, who gave their lives trying to make a difference, as well as the thousands who perished at their places of work or on airplanes thinking that they were on their way to visit family members or perhaps on the way to a much-needed vacation. While this country may seem horrifically divided today, on that morning, all of those differences melted away. And while that sentiment may have only lasted for days or weeks, for a brief moment, we weren't Democrats or Republicans, black or yellow, brown or white. We were all simply Americans. This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy. Hello, Sat Stackers. Welcome to the latest episode of the Bitcoin Bulletin Podcast. As I mentioned in the intro, today is Wednesday, September 11th, 2024, and I do want to keep this episode upbeat, so I'm not going to spend a whole lot of time talking about this. I think I already said pretty much what I wanted to say on that subject. But I do want to point out that as divided as things seem in this country right now, this country has been equally divided, if not more so in the past, and that there have been times like September 11th when we realize what's truly important as Americans or as human beings in general. And it's part of the reason why I'm a Bitcoiner is because I see the good in people and I see that there are things that bring us together and that we have more things in common than we do that divide us. And so I'm not going to dwell on that too much. And we have a lot to talk about this episode. So we're going to get straight to it. But of course, before we do, let's go ahead and take our customary look at the vital statistics. At the time of this recording, we are at a block height of 860,930, and Bitcoin is ringing in at a US dollar price of $57,900, which means that each fiat dollar that we convert to Satoshis today will get us 1,727 Satoshis. And so Bitcoin is down a couple $100 from last DCA Wednesday. About $200 or $300, depending on where you get your data. But, we spoke about that quite a bit in length the last several episodes about why I think Bitcoin is we're still kind of in that price discovery phase in between the supply shock of the halving and when we would traditionally expect to see the post-halving face-melting bull run. And we'll get into that just a tiny bit more in this podcast, although we do have a lot to talk about. And it is getting late. It's a little bit later than usual. It's not as late as a few times when I've been racing to get this podcast recorded and posted before midnight. But it is pretty late nonetheless. Where was I? Bitcoin's current price gives it a market capitalization of $1.14 trillion. So not as high as we have seen it when Bitcoin was, setting that just before the halving new all-time high, but still significantly above that magic number of $1 trillion. And I've spoken about magic numbers in human psychology on numerous occasions, but I firmly believe that $1 trillion market cap was, that was the point. That was that number, that magic number in the mindset of the financial media and of the average normie where it was undeniable that Bitcoin is now a force to be reckoned with, that it's a serious asset, a serious monetary system, a serious currency. As opposed to just internet nerd money when it was much more obscure, when maybe there was a couple $100 million or even in the billions of dollars of market cap. $1 trillion used to be a lot of money, and it really, really is when you stop and look at it. But unfortunately, in the grand scheme of things, humans have become conditioned to think of $1 trillion as nothing. I mean, they were talking about printing $1 trillion coin to help pay off the deficit not too terribly long ago. An idea that rears its ugly head from time to time, or its silly head, as I should say, from time to time. So maybe one day $1 trillion won't even mean anything to the normies, but at this point in time, $1 trillion is still that magic number, a nice even number, a huge number that indicates that Bitcoin has arrived, that it's here to stay, it's not going anywhere, that it is as serious of a financial instrument as or an investment asset, depending on how you look at it, as anything else out there, and rapidly climbing. For those of you who still value your wealth in shiny yellow rocks, it will take 23 even ounces of gold, 23 round, my precious Peter Schiff bucks, 23 Spanish doubloons, to purchase just one Bitcoin. Down a tiny bit from last week. Of course, we've seen the price of Bitcoin retrace this month from, above $60,000, pushing $70,000 again, to as low as $55,000 at one point. And again, without dwelling too much on price, 23 ounces of gold is a lot of gold, considering I remember not too terribly long ago that Bitcoin hit, gold Bitcoin parity, where one Bitcoin was worth 1 ounce of gold. And boy, did that eclipse that fast, because we're now almost 2 pounds of gold to purchase just one Bitcoin. And as I've said many times on many previous episodes, I believe before the end of this year, we will definitely be talking about Bitcoin in terms of pounds of gold, not ounces of gold. And that will just continue to get more extreme as gold trends to zero in Bitcoin terms, as Bitcoin eats gold's lunch, so to speak, as Bitcoin, which is increasingly being recognized, at least at bare minimum, as the electronic version of gold, begins to replace gold as the electronic version of everything, has ultimately and steadily replaced the old school analog version of what it came for, in the way that email replaced regular mail, in the way that podcasting and streaming replaced going to the store and buying vinyl records or cassette tapes, or in the way that movies are now increasingly more streamed. Technology always eats its antiquated counterpart, and the same thing with gold. Even if we only believe that Bitcoin is just a better version of gold, Bitcoin will continue to replace gold in its monetary capacity. For those of you who value your wealth in pizza, one Bitcoin will purchase you a whopping 3,238 large pepperoni pizzas from Papa John's. And boy, has that changed dramatically from that very first Bitcoin Pizza Day in 2010, when Laszlo made that first real-world Bitcoin transaction and paid 10,000 Bitcoin for 2 pepperoni pizzas from Papa John's, or 2 pizzas from Papa John's. Again, as I've said in the past, that pizza will continue to trend to zero in Bitcoin terms, and I firmly believe that even with a sideways market going on right now, and even with the traditional bear market after the bull market, every post-halving bull run, that as Bitcoin continues to march up and to the right, even if it stair steps up and to the right, as you zoom out, Bitcoin continues to trend up and to the right, that as of this moment in time, if you had one Bitcoin and you decided you were going to try and spend that Bitcoin by simply purchasing one pizza a day every day, you would find that that's an impossible task, because the price of Bitcoin, the number of pizzas that one Bitcoin will purchase, is going to go up faster than you could spend that Bitcoin. Right now, for example, it would take you just about 9 years to spend a Bitcoin one pizza at a time. And that's if you froze Bitcoin in its current price, if Bitcoin didn't have a bull run coming up, and since we know that it will, and we know that 9 years from now, we're going to have had that history repeat again more than once. We've got this halving, we've got the 2028 halving, the 2032 halving, all coming in less than 9 years, that because Bitcoin is going to continue to trend up and to the right, it's going to outpace your ability to spend it on pizza. And that's pretty cool to think that if you had just one Bitcoin, that you could basically guarantee that you would get to eat at least once a day, even if it was just one pizza a day, for infinity, for the rest of your life. I don't think you'd ever be able to spend all of your Bitcoin. So if you're a whole coiner, if nothing else, you'll never starve. You might get sick of pizza, but you won't starve. Okay, that metric that has been my favorite metric for most of this podcast, Bitcoin's 24-hour average transaction rate, It's humming along. It's currently averaging 4.84 transactions per second, which before Taproot and this whole ordinals and inscription shenanigans would have been an incredible amount of transactions, an incredible amount of on-chain activity. However, because a large portion of the on-chain activity right now is that ordinal spam, we're actually looking at a significant decline in 24-hour transaction rate over the last 2 weeks. Last week, for example, we were averaging 8.42 transactions per second, and a week before that, 9.21 transactions per second. And in general, over those 2 weeks, the price of Bitcoin has tapered off a little bit. So again, not any not any kind of official transaction analysis. I think TA is all voodoo, that nobody has a crystal ball. Bitcoin's simply going to do what Bitcoin's going to do. We can make educated guesses. We can look at the past and say, well, in the past, or based on these circumstances, or based on the halving, for example, Bitcoin has performed in certain ways. But even then, that's all just an educated guess. And so nobody has a crystal ball. But it is interesting that in the more than 3 years we've been doing this podcast, when the average 24-hour transaction rate is down, the price of Bitcoin has been trending down. And when it's trending up or way up, the price of Bitcoin is going up as well. So just a fun anecdote. And of course, correlation is not causation and vice versa. But I digress. I do like to know what the on-chain activity looks like, even if it has nothing to do with price, because it's fun to see Bitcoin utilization. And again, a lot of that is spam with the Taproot wizards doing their thing, but it's still a heck of a lot of activity, especially if you go back just a couple years when we were talking just 2 to 3 transactions per second. We're almost double that now, regardless of how much of that is spam or not. Speaking of on-chain activity, Clark Moody's dashboard has a little bit more activity, a few more transactions in it than it did last week. Currently, Clark Moody's dashboard is showing they have 167,234 transactions in their mempool. That is up about 15,000 transactions from last week. Mempool.space is telling a different story. They've always had a slightly larger mempool, and they're showing 216,861 transactions, but that's down about 30,000 transactions from last week. So that is an illustration of why it is important to get your data from more than one source. Just like when you're reading the news, we all know there's bias in the media, and so we like to get our news from various sources. And this isn't bias. This just happens to be, different sources of data getting and processing their data in different manners. And of course, the way the network propagates out transactions from node to node, it means, your node might not be seeing the same number of transactions as the next node. And so there's always going to be slight differences here and there. And in this case, Clark Moody's dashboard has always shown fewer transactions than mempool.space's, but it's odd that one is showing an increase in transactions while the other is showing a decrease. I'm not sure that's something we've ever seen before, at least not on DCA Wednesdays. And speaking of on-chain transactions, if you need to send an on-chain transaction, it's looking like it's going to be perhaps a little cheaper to do so. Clark Moody is telling a slightly different story than mempool.space. So again, that's why we like to get our data from multiple sources. Currently, Clark Moody's dashboard is showing that a high priority transaction needs a 6 sat per VByte fee to guarantee it's in the next block, up from last week when they were saying just 4 sats per VByte would do the trick. However, they're saying that a fee of just 2 sats per VByte will be mined within a day. And that, of course, is the lowest fee that they're recommending, even if you have up to a week to wait. And 6 sats per VByte is still really, really inexpensive when you're talking about being able to send basically an unlimited amount of value anywhere in the world without a third-party intermediary or a government being able to tell you cannot, or being able to block the money, to seize the money, to freeze the money, to steal the money. 6 cents per VByte is still remarkably cheap. Mempool.space, though, is saying that a high-priority transaction need only a fee of 3 sats per VByte. And they're saying that will work across the board, whether you have a high priority, low priority, or no priority transaction. They're recommending a straight 3 sats per VByte fee. And that works out to just 24 cents. And that is truly incredible. Imagine being able to send money from, Singapore to Afghanistan, or from the United States to Thailand, and being able to do it instantly for just 24 cents. That is quite the bargain. And I was watching fees on mempool.space for the last couple of days while I was just, doing my thing, staring at charts, but also preparing for this podcast. And I saw yesterday multiple blocks where 2 sats per vbyte were routinely getting mined. And so that's pretty incredible. That's about as close to as close as we've seen to that magic 1 sat per vbyte fee that Matt Odell and Marty Bent have that ongoing bet about. The mempools aren't clear, but it doesn't get any cheaper than 1 sat per vbyte. So 2 sats per vbyte is as close to that as we've seen in a really, really long time. And when we're talking about 3 cents at 3 sats per vbyte, that's negligible in terms of fees go, especially for the service that you're getting. Obviously, if you're buying a $2 cup of coffee, 24 cents is more money than you want to spend. But I think pretty much most people that are making small transactions now have transitioned to the Lightning Network. I know when I've used Bitcoin to buy coffee, I've done so exclusively via Lightning. And of course, Lightning is practically free, less than a penny, in terms of the amount of Satoshis that it takes to send most Lightning transactions. Since the last Bitcoin Bulletin podcast, in fact, just about less than 100 blocks ago, we had an increase in the difficulty that it takes to mine the next block of Bitcoin. The difficulty was adjusted upwards. It got 3.6% more difficult to mine Bitcoin. For those of you just following us, the Bitcoin Core protocol adjusts the difficulty that it takes to find a block of Bitcoin every 2016 blocks, which works out to about once every 2 weeks. With the goal of keeping blocks coming in at an average interval of 10 minutes in between blocks. When blocks are coming in faster than that, it gets more difficult to mine Bitcoin. And when they're coming in slower than that, it gets easier to mine Bitcoin. And while the price of Bitcoin has been going up and to the right, so has in general the hash rate and the difficulty that it then takes to mine Bitcoin. So usually we're used to seeing increases in difficulty. There have been times, even this year, even in the last few months, when there have been difficulty decreases. But in general, we've seen increases as the amount of computing power securing the Bitcoin network increases. So currently, we're 1,918 blocks away from the next mining difficulty adjustment. So just about 2 weeks. It's looking like that's going to occur on Tuesday, September 24th. And it is way too early to tell because we've had less than 100 blocks and because that is an average time. It's a lot like flipping a coin, as I like to say. You can flip a coin and get 3 heads in a row. But if you flip a coin 2016 times, you should get about 1,008 heads and 1,008 tails. And that's why the protocol waits 2016 blocks to make that determination. I've seen blocks come in. Well, I was watching just in the last few hours, and I've seen several blocks come in back to back within just a minute or two of each other. But there were also plenty of blocks that took a half an hour or longer in between. So it takes 2 weeks to figure out what that average is going to be and what we're going to do. And currently, anywhere you get your data is saying we're going to have a decrease in difficulty. And it's a wide spread, not even worth talking about. But one source says it's going to be a 2% difficulty decrease. The other's forecasting a 22.5% difficulty decrease. And the reason for that is right now, these first 100 blocks have averaged significantly slower than 10 minutes. Currently, they're averaging 13 minutes and 3 seconds. And that is about the widest, the longest amount of time we've seen blocks averaging pretty much in the history of this podcast. But again, it's not unusual because we've only had about 100 blocks, and some of them have come in, multiple of them have come in taking more than a half an hour. Of course, we had a difficulty increase last difficulty adjustment, and there were numerous times when I had mentioned that we'd seen several blocks that had taken longer than an hour between blocks. And so, again, that's just an average, and it's a distinct possibility that we'll see another large increase. It's just that we've had a few blocks take significantly longer than 10 minutes and a very small sample size. So we'll check back on the same statistic next Wednesday when we're halfway in between difficulty adjustments or so and see how things are looking. But again, you really don't know what it's going to be until you're pretty much there, until it's imminent. And of course, it's possible that the last block takes so long that even when you're looking at a potential difficulty decrease, all of a sudden you end up, or increase, you all of a sudden end up with a decrease just because you don't know until you know. But it's a fun statistic to look at. And of course, the reason why difficulty continues going up and to the right is because the network hash rate securing the network continues to go up and to the right. Last week, it was estimated that there were 613.8 exahashes securing the network on a 90-day average. And today, that same estimate is saying there are 617.5 exahashes securing the network. So even though blocks have been coming in slower, and the difficulty estimator is saying that we're going to have a decrease in difficulty, the estimate on the hash rate is that we have more hash rate pouring onto the network. The amount of hash rate has gone up. Therefore, blocks should ultimately end up coming in faster, and we should be looking at another difficulty increase if that holds. Again, none of this actually really makes much of a difference to the average pleb. If you're sending a Bitcoin transaction on chain, you have no idea whether you're going to get into that block that only takes 2 minutes or a block that takes 30 minutes. But the difference between a 10-minute standard block and a 13-minute block is pretty much negligible if you're just sending Bitcoin to a friend or moving it to your hardware wallet. The only time that really makes a difference is if you're a large-scale commercial miner, in which case 2 or 3% can make a huge difference in your bottom line, either positive or negative. Or if you're a pleb and you're mining away at home, you've got an Antminer S9 or S21 in your garage, maybe it's winter or getting to be winter soon where you are at and you live someplace cold. I do not have that problem here in Florida, but if you do, maybe you're one of those plebs that's been experimenting with heating your house or maybe heating your hot tub with heat generated by a miner. And if that's the case, you'll be making a few more Satoshis if we end up with a difficulty decrease, especially if we end up with a large one, or you'll be making a few less Satoshis, a few fewer Satoshis, which is usually the case if we end up with a difficulty increase, which has often been the case. Real quick, I want to thank those of you listening on your favorite Podcasting 2.0 apps, such as Fountain. Podcasting 2.0 allows you to help support this podcast through the value for value method by either streaming sats on a per-minute basis as you listen. For example, you can determine what the value you're receiving from this podcast is. If you think you're receiving 1 Satoshi per minute worth of value, you can set it at 1 sat per minute. If you think you're receiving 10 Satoshis per minute worth of value, you can set it at 10 sats, and then just automatically stream those Satoshis as you're listening to contribute value back to the podcast. Or you can send a boost, which is my favorite method, and a boost is where you send a shout out. Basically, you send a message to the podcast. Freudian slip there, got beer on the mind today, where you send a shout out to the podcast. And of course, the shout out comes as a Lightning transaction. So while you're letting us know what you think about the podcast, you're also sending Satoshis to help support the podcast, to contribute a little bit of that value back to the podcast in that value for value method. And speaking of our listeners, once again, our geographic distribution of listeners has remained completely ossified. It hasn't changed since July 3rd. In the last more than 2 months now, our top 10 countries by listenership remain as follows. Number 1 remains the United States, where more than half of you are listening. So hello and thank you to my fellow Americans, wherever you may be in the United States, for listening to and supporting this podcast. Of course, just listening is the easiest way you can support the podcast. Number 2 has been for many, many months and remains Argentina. So hola, muchas gracias amigos in Argentina. Number 3 remains Germany. So guten Abend, dankeschön, mein Freund in Deutschland. Number 4 remains Canada. So hello to you up north, where it probably will be getting really cold very soon if it hasn't already. So maybe you are the plebs out there heating your houses or your hot tubs with excess heat from your Bitcoin miners. But thank you, hello, and thank you to those of you listening in Canada. Number 5 remains Luxembourg. So dankeschön, mein Freund im Luxembourg, or Morgen, guten Abend, or Morgen to those of you who speak Luxembourgish. Number 6 remains Spain. Again, hola, muchas gracias amigos in Spain. Number 7 remains Colombia. Hola, muchas gracias amigos in Colombia. Number 8 remains Mexico. So hola, muchas gracias amigos in Mexico. Number 9 remains Australia. Australia made that move into the top 10 after July 3rd, I guess, the DCA Wednesday after July 3rd, so July 10th, and they've remained there ever since. So thank you to our cousins down under, and thank you for listening in numbers that keep you in the top 10. Number 10 remains the United Kingdom, our cousins across the pond. So hello, and thank you to those of you listening in the United Kingdom. And lurking down at number 11, I know we only read the top 10, but This is an important one because they were in the top 10 for the longest time, years, and as a matter of fact, and they got knocked out of the top 10 by Australia, and they're remaining down there just clinging on at number 11. And that's a country where Bitcoin, I believe, is more important to them than it is to the average European or the average person listening in the United States or Canada. It can be more good, of more use to them now than it can here, and that is Venezuela. So, hola, muchas gracias, amigos in Venezuela. Hopefully, we will see you back in the top 10 soon. I know you have a lot going on down there right now. It's crazy out there in a lot of places in the world, and Venezuela is certainly no exception to that rule. So I know you have a lot going on in Venezuela. You have a lot in your minds, but thank you for listening, and thank you for listening in such numbers that you're hanging in there just below the top 10. Of course, thank you to all of you listening, regardless of where you're listening from. It's you out there listening to the sound of my voice that makes it worth doing this. We do not have any sponsors this podcast. I'm not doing this for money, obviously. I do it because I like talking about Bitcoin. Like so many of you, I don't have a lot of friends that I talk about Bitcoin in person with. And even if I did, they're already orange pilled. So I like to talk to you out there, and hopefully some of you are listening for the first time and we're helping orange pill you, or you're longtime listeners and you're listening because you want to have more information to help orange pill friends and family. And that's why I do it. And that is what makes it completely worth sitting down in front of this microphone every Wednesday and sharing my thoughts. On to the news. Of course, the news every week seems to be the price. They say the news is the price and the price is the news. And as we discussed last week, September has consistently been the worst month for Bitcoin performance of every year. On average, Bitcoin typically loses about 5% of its value in September, even on face-melting bull run years. In fact, Bitcoin has only recorded 2 Septembers where the returns were actually positive over the month of September. And obviously, every 4-year halving cycle has a September. But even with the halving cycle, only twice has September been an up month for Bitcoin. Today's big market driver across all assets, however, was the release of the inflation numbers. The CPI data came out today, and the official inflation numbers came out mixed. Most of the media is focusing on CPI coming in line with analyst expectations. However, there's also concern as the quote-unquote Fed's favorite metric, which is core inflation, was actually up 0.3% or 3.2% over the year, which isn't a giant increase, but it's not a decrease. And so the markets were focusing on what inflation is doing because they are doing the rain dance, praying for a Fed interest rate cut. And of course, we assume that's baked in. Jerome Powell has said basically as much as so. His speech in Jackson Hole basically said that was the only concern was basically how much they're going to cut by. So people were trying to read the tea leaves and decide whether we're going to get a 25 basis point cut or maybe a 50 basis point cut. And if inflation had continued to go down, at least the official numbers, and we all know that pretty much all government statistics are BS, the fact that inflation either came in at expectations or, according to core, actually ticked up, was disappointing to people that were hoping that they were going to get a 0.5% cut at the next meeting of the Fed. Reuters ran the headline, U.S. inflation trending lower, but some stickiness remains. Investor.com ran the headline, core inflation perks up, sinking odds of big Fed rate cut. S&P 500 rallies. I've always thought this was funny that the markets care so much about easy money. In fact, they care so much more about easy money than the actual prospect, that the actual prospect of interest rate cuts causes, just the prospect of interest rate cuts causes the price to go up, despite the fact that what they've been cheering on is a slowing economy. I mean, obviously they've been cheering on inflation coming down because interest rates were raised to combat inflation in theory. But how they were combating inflation was by trying to slow the economy, by trying to put people out of work. And so when it appears that's working, when it appears the economy is slowing down and therefore the Fed's going to cut rates, stocks go through the roof. When in reality, when the economy is slowing, what that means is companies are going to struggle. And some of the companies in your portfolio are going to start losing money. And if they start losing money, the actual value of your stock goes down. In fact, if those companies end up going out of business or even just seeking bankruptcy protection, then your stock goes to zero. So I've always thought it was funny that the markets are just cheering on bad economic news. Yay, unemployment's going up, or yay, businesses going out of business, or they're hiring less people. So stock market, goes through the roof. The prices of stock goes up. And it's like, the fundamental value of those stocks is going down because consumers don't have jobs anymore in many cases. They have less money to spend. That's bad for the business, which means it should be bad for the price of the stock. But as they say, markets can remain irrational longer than you can remain solvent. And as I mentioned when I talk about silly magic numbers and human psychology, humans are weird animals. So basically, this is translated into mixed reactions. Cointelegraph ran the headline, Bitcoin dismisses on-point CPI print as daily BTC price loses 3%. Bitcoin bulls failed to capitalize on CPI, with Bitcoin price action instead diving below $56,000. Some of that's probably, I'd say most of that is probably due to the fear and uncertainty surrounding the presidential election coming up in November. We had the presidential debate last night, and ironically, the second that the debate started, Bitcoin had been going up all day, and literally the minute the debate started, I had a price ticker open also, and I saw the price of Bitcoin start trending down. And in just the first half an hour of the debate, the price of Bitcoin dropped by more than $1,000. Yahoo Finance ran the headline summarizing this basically, that Bitcoin dips as Harris and pro-crypto Trump clash in debate. Bloomberg ran an article stating as much, saying Bitcoin slid as investors reacted to the U.S. presidential debate between Democratic nominee Kamala Harris and Republican rival Donald Trump, who has embraced the crypto sector. The digital asset fell by as much as 3.4% before pairing some of the drop to trade around 55,850 as of 10 a.m. Wednesday, New York time. In wider markets, stocks fell and bond yields rose after a faster than anticipated inflation report reinforced speculation the Federal Reserve will start cutting rates at a more gradual pace. The original cryptocurrency is one of a number of so-called Trump trades. Because of the former president's avowed support of the digital asset industry, Bitcoin was thus in the spotlight as something that might provide clues on who gained the upper hand in the debate. Ironically, Bitcoin didn't come up in the debate. Probably not ironically, because it's definitely not a strong point for Kamala Harris. And the debates always seem to be, they never really seem to focus on what Americans really care about. They seem to focus more on, usually in the last two cycles, just on making Donald Trump look bad. But I'm trying not to get into politics too much on this. But one thing that does bother me is this whole, the uniparty, or the party of orange versus the party of red and blue BS. But as far as debates go, I've explained this to multiple people recently that were concerned about the debate, especially people that aren't Americans, that don't have their finger on the pulse of what's going on in the United States as much as you do if you live here. And I tried to explain to them that the debates mean nothing. The last time I think a debate actually influenced the outcome of an election was the debate between Richard Nixon and John F. Kennedy, which was the very first televised debate. And because it was the first televised debate, it was the first time people had actually seen what the candidates looked like, been able to read their body language. And so it had an outsized impact. And it's widely attributed to costing Richard Nixon the election and why we had John F. Kennedy as president. So I like to say expecting the debate to change someone's mind is kind of like expecting the Super Bowl to change a fan's mind about which team they feel loyal to. Or to put this in less of an Americanized perspective, imagine watching the World Cup with a quote-unquote open mind about which team to cheer for. I mean, it just doesn't happen, right? You have your favorite team and you're going to cheer for that team regardless what happens. And much like the debates, when people get angry at the moderators, it doesn't matter which team you're cheering for. Both sides think the referees do a lousy job. And the outcome of the game, the outcome of the match, has absolutely no effect on which team you're going to cheer for at your local pub next season. And likewise, the debates in the United States are basically just theater. However, the choice couldn't be more clear for Bitcoiners, in my humble opinion. Kamala Harris is the current vice president of the United States. And while many people have tried to minimize this in relationship to the unpopular administration policies and the current state of our economy, etc., the White House itself sought to remind us that she was quote unquote co-president. In a press conference with the White House press secretary just last week, that was her emphasis, that Kamala Harris is very much a part of the team and that she's heavily involved in all the decisions that the White House is making. So it's for that reason really silly that we have Kamala running a campaign that basically says it's almost like a hope and change campaign. Like she's campaigning as the outsider, trying to paint herself as that I'm going to change all these things if I'm elected president. When she's currently in charge, if there's something that she believes in that is so great that she really wants to do for the country, there's nothing preventing her from doing it right now. Anyway, what we have is a choice between the status quo, and the status quo attacks Bitcoin on an almost daily basis by the SEC enforcement, for example, by imprisonment of key players in the industry, by Operation Choke Point 2.0, which is blocking banks from doing business with Bitcoin companies, and of course the other side of the coin, which is the candidate who wants to make the United States the home of Bitcoin, that the candidate who's pledged to support Bitcoin and Bitcoin developers, who's pledged to make the U.S. the most Bitcoin-friendly country on the planet, the person who said that he wants to see the last of the remaining Bitcoin mined right here in the United States, the candidate whose administration is supported by the likes and will be greatly influenced by the likes of RFK Jr., who is as solidly on the team Bitcoin as you can possibly get, and Vivek Ramaswamy, who is credited with actually orange-pilling Donald Trump in the first place. So this is why this uniparty nonsense bothers me so much. And in fact, if you're one of the people out there spouting this uniparty BS or saying things like the same wing, the left and the right are just different wings on the same bird, I want to remind you, you don't hear this buzz any election except when there's an incumbent Democrat administration. Why is it that we only hear this when there's a serious Republican challenging an incumbent governor? You never heard Obama called just the different wing of the same bird. You never heard Hillary called just the same wing of a different bird, or just the different wing of the same bird. I think it's propaganda. It's manipulation. It's a psyop. The uniparty, while there are definitely, elements of the deep state, the whole concept of the uniparty, at least the way it's being thrust down our throats on certain prominent Bitcoin podcasts, for example, is nonsense. And the fact of the matter is that this year, this election, the differences are crystal clear. Obviously, there's that element of the deep state that will live on regardless who is president. But on the issue of more or less taxation, the choice is clear. On the issue of a unrealized capital gains tax on Bitcoin you hold that you haven't taken out of your cold storage, that you're not selling, that you're not using to make purchases with, that choice is crystal clear. On the issue of price controls on groceries, for example, the choice is clear. On the issue of micromanaging the economy, the choice is clear. On the issue of nurturing Bitcoin companies and development or regulating them and prosecuting them out of existence, the choice is clear. And as if to put the punctuation mark on this, Decrypt ran a headline last week. Fed issues cease and desist order to United Texas Bank over crypto-related concerns. Cointelegraph ran the headline. Fed hits Texas Bank with cease and desist over servicing crypto firms. No BS Bitcoin ran a similar headline and expanded upon this a little more detail. The Fed issued a cease and desist order to United Texas Bank last Wednesday for significant deficiencies in adhering to anti-money laundering laws, especially in dealing with cryptocurrency customers. The examination identified significant deficiencies related to foreign correspondent banking and virtual currency customers, specifically risk management and compliance with applicable laws, rules, and regulations related to anti-money laundering, was stated in the order. This is the second time in a month the Federal Reserve has acted against industry-friendly banks. In August, the Fed found, quote again, significant deficiencies in Customers Bancorp Inc.'s risk management and anti-money laundering compliance. The notice did not specify how the bank's crypto businesses violated AML regulations. On a positive note, though, people are fighting back. Caitlin Long had an interesting post this morning on Twitter saying states are waking up to the authoritarian debanking pressure applied by Warrenite federal bank regulators and realizing they have ways to fight back. Florida CFO proposes to start a Florida state-owned bank as a way to keep power over banking in his state. And she linked to an article from SharePost that says, Florida Chief Financial Officer Jimmy Patronis has come up with an urgent reason for a state to own its bank, to avoid bank regulations designed to achieve social or political ends that state officials believe are inappropriate or going too far, including debanking vocal opponents of federal policy. The concerns are constitutional, testing the First Amendment guarantees of free speech, freedom of the press, and freedom of religion, and the 10th Amendment right of states and citizens to self-govern in manners not specifically delegated in the Constitution to the central government. It goes on to say Tennessee, Louisiana, West Virginia, Florida, and Arizona, Kentucky, and Mississippi have also introduced bills to curb debanking or on political or religious grounds. So, that gets into what we were talking about earlier about the current administration weaponizing everything, basically. In this case, the financial system against Bitcoin and the quote-unquote crypto industry. So this is a really interesting way that Florida is choosing to fight back. But again, the choice is crystal clear. You have the current administration that is pursuing this kind of shenanigans, and you have Donald Trump who's promising to bring it to an end. In fact, he said that exactly in those words at the Bitcoin conference in Nashville, that Elizabeth Warren's war on crypto will end on day one if he's elected president. However, speaking of the election, I know a lot of you are sick of it, and Ben Justman, who is the proprietor of Peony Lane Winery, tweeted a meme that basically sums up how a lot of us are feeling. He says, "End this charade," and then he tweeted a meme, and it's basically the Pablo Escobar TV show meme with, Pablo looking lonely and dejected, sitting on the swing or sitting at his desk or staring blankly with his arms behind his back, and it says, "Me waiting for election season to end." And I couldn't agree more. While I'm passionate about the differences between the two candidates, I too could just not wait for it to all just simply be over. Along those lines, CNBC ran an optimistic headline saying Bitcoin could soon hit six figures regardless of who wins, investors say. And I don't need to get into this article to tell you, of course, I believe that is the case because we haven't had our post-halving bull run yet. Last episode, I dedicated a lot of time explaining why I believe this halving cycle's bull run hasn't even begun to start yet, including last episode where I broke down specific numbers and dates, etc., to show why I believe this is true, that at this point in time in the previous cycles, the bull run hadn't started yet, why I think that we had a premature pump because of the ETFs and why that's kind of settling in now and getting back to where Bitcoin would normally be, the trajectory that we'd normally be at had that not happened. Hopefully I did a good job of it. Sometimes I do a better job of articulating my thoughts and I'm just riffing off the cuff unscripted than when I'm trying to sort through mountains of notes. I tend to get jumbled up in my own notes sometime and have a hard time explaining what I'm talking about. So I definitely prefer to speak off the cuff more often than not. One other positive bit of news before we get into the DCA Wednesday aspect of this show, and that a lot of people are reporting that Japanese electric firm TEPCO is getting into the Bitcoin mining industry. And there have been numerous headlines along the lines of TEPCO firm uses surplus green energy to mine Bitcoin. I actually posted a link from a Japanese media website saying that, but No BS Bitcoin gets into it in a little more in depth with their headline from yesterday entitled, "Japan's largest electricity provider explores Bitcoin mining with surplus renewable energy." Agile Energy X Inc., a subsidiary of Tokyo Electric Power Company, or TEPCO, is exploring Bitcoin mining using renewable energy strategies. And that's actually a little misleading. The whole exploring mining doesn't mean they're thinking about it. They actually are mining. The article goes on to say, in Japan, renewable energy production is often reduced to manage supply and demand to transmission transmission limits. To utilize this excess energy, Agile X Energy has installed Bitcoin mining machines near photovoltaic plants in Gunma and Tochigi prefectures near Tokyo. Quote, what we are doing has few parallels in Japan. Success of our framework would prompt more green energy to be introduced, said Kenji Tataiwa, president of the company. TEPCO serves over 27 million residential and business customers. In 2023, about 1,920 gigawatts of electricity were reduced in Japan. The government aims for carbon neutrality by 2050, targeting green energy to supply 50 to 60% of the country's total power. The company estimates that if renewables met 50% of Japan's energy needs, up to 240,000 gigawatts could be wasted annually. Using even 10% of this excess energy for Bitcoin mining could generate up to 2.5 billion, 360 billion, 2.5 billion dollars, or 360 billion yen per year. So that is exciting. As many of you know, a lot of energy in general is wasted or stranded because they're unable to transmit it long distances, or because you have a lot of solar generation when the sun is shining, and of course none when it's not shining. So you have peaks in energy capacity, and sometimes you're making more energy than you can, and it goes to waste. And that's one of the things that Bitcoin miners are tapping into. Miners all over the country have been tapping into this for years, but energy companies are starting to wake up and realize they don't need to just sell this electricity they're wasting, find miners to take it off their hands. They can actually mine Bitcoin themselves. And I think this is going to be one of the ways that we see the mining industry help secure the network, even when the profitability, is variable. They're not going to have to seek out the cheap electricity because they're already going to have it. It's going to be a big deal. I think this is something we're going to be talking a lot more of in the not too distant future. One last thing on a funny note: Parachutes BTC tweeted Peter Schiff's wife buys Bitcoin, and tweeted out a screenshot, which I've been unable to verify the authenticity of, but it's a screenshot from Peace, who is at Necron99 on Twitter, that says, "Your wife buys Bitcoin behind your back," and a reply from Peter Schiff saying, "Actually, she did. No one is perfect." And that's just kind of amusing. Whether that's true or not, we do know that Peter Schiff's son is a Bitcoiner. Most people believe that Peter Schiff himself is probably actually a Bitcoiner. But one way he could maintain his anti-Bitcoin zealotry and still actually stack Bitcoin was if his wife was doing it, right? Gives him plausible deniability, so maybe it's true. Okay, on to what makes today and every Wednesday special, and that is today is DCA Wednesday. If you're not familiar with what DCA is, if you're just listening to this show for the first time, DCA is short for dollar cost averaging, and dollar cost averaging is an investment strategy where you invest your money in equal portions at regular intervals, regardless of price. For example, this is going to be our 164th stack. We started stacking every Wednesday all the way back on July 28th, 2021. So our regular interval is weekly on Wednesdays. And we started stacking just $20 a week. So our equal portion is just $20. And so far we've stacked 163 times, converting a total of $3,260 US into a stack of 9,839,895 sats. And to grow that stack, as usual, we're going to use the handy dandy Cash App. Cash App is not a sponsor of this show. I just like using Cash App because I think it's the easiest way, for me at least, to make small purchases of Bitcoin. They're not the cheapest service out there. They charge a little bit more of a fee than a lot of other exchanges or apps do. But they do let me transfer my Bitcoin to my hardware wallet for free. And so I think that, in my case, makes up for their fees. Again, this is a you do you thing. They are not a sponsor of this show. They might not even be available where you're at. So you do you, make up your own mind, but we're going to use Cash App. I already have Cash App open. I've got $20 in Cash App. So it's just a matter of tapping Bitcoin, tapping buy, entering $20. And boom, just like that, we purchased another 33,897 sats. Bitcoin went down just a tiny bit while I've been talking. So we purchased at a price of $57,675. And that raised our total stack to 9,873,792 sats. With the price of Bitcoin staying down the last month, we're getting closer to that unofficial stacking goal of 10 million sats. In fact, if Bitcoin stays right where it's at, that's only 4 more DCA Wednesdays till we break that 10 million sat mark. And if you've been stacking alongside with us, hopefully that's the case for you as well, at least that much. Maybe you're stacking more because, again, this is a you do you thing. However, today's purchase did increase our average purchase price a little bit, actually by about $88. So our average cost basis is now $33,219.25, which is still, that's just, it's just a little more than half of the $57,675 that we paid for Bitcoin. Obviously, more than half, because that would be closer to $65,000 Bitcoin. But I digress. The point being, $33,000 is a heck of a lot cheaper than the current price of Bitcoin. And even if we didn't do another single DCA Wednesday stack, if we didn't add a single more Satoshi to our stack, when Bitcoin eventually hits 100,000, I believe it will go beyond that in this halving cycle alone. But at $100,000, our current stack would have a US dollar value of $9,873.79. Not too shabby considering that we've only converted $3,280 now into Bitcoin at just $20 a week. Pretty good nest egg for just $20 a week. If Bitcoin hits $1 million one day, and I firmly believe it will sooner rather than later, that stack would have a value of $98,737.92, significantly more than the average American has put away in savings. There's studies now that say the average American has less than $400 in savings. They can't even cover a $500 emergency bill. But if you've been stacking just $20 a week every DCA Wednesday and Bitcoin hits $1 million, you will have an emergency nest egg of $98,737.92 worth of Bitcoin. If Bitcoin hits Jury and Timmer of Fidelity's $1 billion forecast, that stack would have a value of an astounding $98,737,920, which would just be mind-boggling, but not out of the question. It would just simply put you into the category of those people that they had said, the articles they run, if you had put just $1,000 into Bitcoin 10 years ago, here's how much money you'd have by now. All those Bitcoin millionaires and those Bitcoin billionaires who got into Bitcoin 10 years before you did. If Bitcoin hits $1 billion, you're going to be one of those people. But more importantly, when fiat currencies begin to collapse, when we have hyper Bitcoinization and people are only accepting Bitcoin instead of that weak paper currency that people are currently using, you will have a sizable stack of Satoshis, more than the average person will be able to accumulate if they just get started now. And that will put you in that lifeboat, that escape hatch that they talk about when they talk about Bitcoin being an escape from the current monetary system. All right, I'm going to wrap this up, but before I go, I want to reach out and ask you to help support the podcast, and not in a financial manner. Of course, if you want to send a boost to StreamSats, we would appreciate you contributing back value for value, but it is equally important to help feed that algorithm monster. Of course, just listening to this podcast does that, but you can boost the booster feeding of the algorithm monster by simply rating or reviewing this podcast. You can also do so by making sure you're following us on Twitter or X. On Twitter or X, we are at BTC Bulletin Pod. Again, that's at BTC Bulletin Pod. And the more followers we get, the more interaction we get, the more likely people are to see this podcast tweets featured in their feed, and the more likely you are to help someone discover Bitcoin and potentially help orange pill them to Bitcoin simply by following us and interacting with us on X at BTC Bulletin Pod. But besides promoting the podcast in the rankings and feeding that algorithm monster, I love to hear from you. So if you're listening to the podcast, I'd like to know what you think. DM me on Twitter at BTC Bulletin Pod. And if you don't have Twitter, you can send me a good old-fashioned email. My email is bitcoinbulletin@protonmail.com. Again, that's bitcoinbulletin@protonmail.com. I check that email all the time, and I do reply to all the email we get. In fact, I have that email open right now as I'm recording, so I will get back to you, even if it sometimes takes a day or so. All right. That wraps it up for this week, but don't forget to tune in next Wednesday and every Wednesday while we grow that stack of Satoshis together, just $20 at a time, for at least as long as people are willing to trade fiat for Satoshis. But until that time, keep on stacking those sats, you sexy sat stackers.